Welcome to this episode of The Curve Weekly. This is where we read the finance news so you don't have to. I'm Vic Harris. I am a finance professional and have spent many years making money for other people. In this week's episode, we give you a update on the Netflix Warner Brothers saga. Now, if you haven't kept up, well, go back and listen to a few episodes because, oh my goodness, this keeps getting more and more juicy. And Paramount, the other bidder for Warner Brothers, has tried to sweeten their deal a bit. So we update you on that. We also talk about an iconic and a classic shoe brand within Nike that is really actually weighing it down financially. Google has a massive financial flex, which we'll run through and explain for you in much detail. And it's to do with the AI space. We can't have a Curve Weekly without mentioning AI. And we're updating you on BC and AC. We don't mean before Christ and after Christ. This is before COVID and after COVID, and the massive wealth disparity that's occurred in Australia between people who bought properties BC and people who bought properties after COVID or AC. But before that, we have a new temporary studio, and we're very excited to show you.
This is what life would be like if we lived in New Zealand, this studio.
Yeah.
It's so good.
Thank you.
Honestly.
I've been trying to keep it a secret, but it's hard when you record video.
But it is quite hard to see because it was only one shot.
Yeah.
I did think, wow, it's looking so good there, but I just didn't know what the context was. So, okay, we'll probably give a bit of backstory because this time last year, it was a bit of a shit show trying to record.
I was like, we can just use my parents' bedroom. It's fine. And then they had like people staying. Oh, it was just a bit.
And there was a bed taking up the whole room.
And my dad, bless, was like, I'm being quiet. And then he'd like put on the coffee machine and the kettle was so loud. It was just, yeah.
It was all go. Anyway, Vic's completely transformed a room into an actual studio. Like, it looks amazing.
I think I should be an interior designer.
Genuinely, if all else fails, I would say the same.
Well, I actually had a lot of help.
What do you mean?
All this beautiful furniture has been loaned to us.
So we don't own it. This is not, we don't get to keep it.
I mean, we can.
Because I was going to say, I actually think I almost like these chairs and the table more than what we have in our studio in London.
I know. I reckon they shipped to London. Anyway, so it was good. KU Studio in Auckland have very kindly loaned us these beautiful seats, tables, benches.
Is the rug theirs too?
I know,
It's so nice.
I feel very luxurious.
Same. And there's like a beautiful bowl. Is this from there too?
Yes. Yeah.
Oh, it's so good. Also, Vic's framed. Well, I thought she'd purposefully framed them for us, but actually we got sent our podcast awards.
Yeah.
They're framed in our studio.
They're very cute. Here they are.
Best independent podcast, best education podcast. I actually think we should take these to London. I think we should definitely put them somewhere. They're so cool.
Should I just put them up on the wall at my parents' house and when they get back? But you don't have enough photos of me on the wall, thank you.
You know when you get sent your degree?
Oh, yeah.
Or you get your degree and most people frame it. I did not. Did you?
I don't even know what mine is.
Yeah, no, I have no idea. I love it. It's so good.
Yeah, and the chair swivel, which is so good.
They're nicer than the ones in our studio. I love the kind of beigey colour rather than off-white.
Yeah.
It's just they're quite comfortable. I'm like sort of already slouching back.
I know. I had so much beautiful stuff. I was like...
Did you choose it?
I wanted to be like, oh, and can you throw in a few extra things for me personally? It'd be great. And just put it on the workout.
Did they design the space or did you choose what you wanted?
I chose it. No, they were very helpful. They were
like... credit.
Yeah. I was like, I just need 2 chairs and a table. And then, bless, it was a rug, it was a bench, it was some bowls, and I was like, oh, okay, she knows what she's doing. No, so they're just a beautiful homewares store, and I reached out to them, and she, bless, was a huge fan of the podcast.
Oh, that's so good! Don't you love it? It's such a good starting point.
And yeah, just incredibly helpful, and it's perfect. Also, I think Mum and Dad should just keep this as a podcast studio.
I agree. If anyone needs to rent a studio.
Yeah. So thank you, KU Studio, for helping us out. Big help. We would have been sitting on the ground otherwise.
No, honestly, last year it was a bit dire.
Yeah.
It would take us like 45 minutes to set up each podcast because we had such limited space with the way we could shoot it.
And then we'd have guests and would be so
It was embarrassing
awkward.
and hot.
Yeah. I remember it was so awkward.
Yeah, it was.
No, you can sit there and you can sit. Yeah.
Yeah,
I'll just stand. You know,
I actually podcast from the bed.
I don't think people realize how, that people do record podcasts from their bed, but I don't know, there's so much more effort that we put in, but I think it's great. I prefer to walk into a beautiful studio like this. And
God, it puts you in the mood.
Totally.
It's the difference
Like
between getting dressed up and not. Like sometimes I find in the morning, this is a really weird example, but if I don't feel good or like I don't like being in track pants and working because I just don't feel like I'm ready for the day.
It's like during COVID, I had to put on shoes.
Oh, yeah, that's right.
I just had this. If I put on shoes, it was like I was
ready for the day.
And I'd put on my shoes and walk from my bedroom to the kitchen. And then, and now it's still a thing. If I work from home, I have to put on shoes. It's so weird.
Yeah. I like often people will have their home, like baggy pants or like they don't get dressed. There's no way any good work is getting done if I don't feel like I'm.
Also, I have a bone to pick with you, with our producer, with everyone listening.
Oh no.
I am sorry I do not know my analogies well. I am sorry I get them wrong most of the time.
Okay, wait, you need to give context for what? Because some people might not have listened to last week's episode.
No, so last week I said, oh my giddy arms.
You didn't say that. You were trying to say that.
Sorry, no, I said, oh my giddy arms. Yes. And I meant... Well, I didn't actually know the actual saying, but it's oh my giddy aunt.
It sounded like you said gilly arms.
Oh no, I said gilly arms. That's right, and it's giddy aunts.
Yeah.
Anyway, my brain only has capacity for so much, okay? And that is financial content.
Yeah, yeah.
So cut me a break, okay?
No, it's cut me a break.
Oh my
God.
There
we go. Cut me some slack. That's what you were going for.
Wow. Oh my God. Couldn't have scripted that one better. Honestly,
I'm just so glad someone picked up on it. I think I'm so used to your analogies being twisted that I didn't even notice at the time.
Yeah. Great to have you back on this side of the world.
Honestly, I'm
How
back.
are you doing?
My hair's frizzy again.
Is this like coffee number 4?
My skin's turned to shit again.
Yeah.
It's all great, I'm loving the humidity.
Your hair does look good.
It's so chaotic, isn't it? I don't know what it is about this weather, but my hair and skin hates it.
It is very muggy at the moment in New Zealand.
What I will say, this is completely random. I really want to go to some fitness classes in Auckland. I want to go to some weights type classes.
Nice.
I'd love to know if anyone is based in Auckland and has any recommendations on good fitness classes. Because I just feel like, what?
Sala.
Yeah, but it's quite far for me because I'm living in the depths of suburbia right now. I'm kind of more I'm not really on Ponsonby side. Anyway, sorry, super niche. But
any recommendations?
Any recommendations? Let us know.
I've actually bought ankle weights, and when I go for a walk, I walk with ankle weights.
Do you?
Yeah.
Does it work?
Yeah. It's just like an extra bit of work.
Oh my God, that's quite good.
Sometimes walking, you're kind of like, it's just a walk. But then if you actually put ankle weights, it's like a walk.
Is it getting fit legs toned? Is it?
I don't know. I think it's just more weight, so therefore using more muscle, it's just more of a strenuous exercise.
Right. How heavy are they? That's quite intense. I feel like I find that hard.
1 kg.
Oh, okay.
No, but I bought 2 kgs. And oh my goodness, it was like this big. It was like this massive turd on my ankle.
No, I think if you're going, you can't be obvious. It'll look like you're walking around with an ankle monitor. You want it to be subtle and tucked away under your boot.
I couldn't even walk in them, let alone go for a walk in them.
Oh,
yeah.
Okay.
Anyway.
That really takes me back to my gymnastics days. We used to have lots of ankle weights. Leg lifts with ankle weights.
Yeah. Have you watched the Winter Olympics?
No.
Oh.
I should. Why? What's wrong with me? Where do I watch it?
Sky Sport.
But who has Sky Sport?
I know.
No, seriously. I mean, do we watch online?
Yeah, I think so. You can do Sky Sport.
One of my friends is a presenter over there. She's amazing.
So is my boyfriend.
Yeah.
Yes, he's doing the night shift. He just came home and he just had a beer at 7 a.m. It was
he comes
quite
in,
wild.
he's like, how you going, girls? I was like, wow, you look like shit. Actually, when I hugged him, I thought, you smell like a brewery. But I didn't want to say that because 7 a.m. I was like, surely not.
Goes to a cafe for breakfast and orders a beer, but actually this is dinner. I was like, imagine if there will be people out there that have this kind of
shift work.
Yeah. And literally, I wake him up and then I'm like, good night.
Weird.
So weird.
Yeah. Very bizarre.
Yeah. And he has a shower and I'm like, hurry up, I want to go to sleep. It's kind of...
How weird.
So weird.
Being on different time zones.
And having dinner by myself because he's asleep.
He nearly made a steak at 7 a.m.
I know.
So, no, I haven't been watching it. Have you had any highlights to share?
No, just all the tricks and stuff,
I'm sorry. Could we sound any less educated around sport?
No.
I just like that. No, where do I watch it?
And
I like the tricks.
I do. It's like it's the fun Olympics, right? I don't know. Like they do like you know. Like
Are we talking about skiing?
skiing, yeah, and then like the half pipes, and then like the ice skating. Like they're the fun sports to watch.
I wonder if it's higher accident prone than, because it is quite like action, isn't it?
There was Lindsay Vonn. She was one of the oldest competing women, 41. She just had like knee construction surgery or something. So she was skiing with a brace. And this was like her comeback. Like she'd been training for years and like went down. Everyone's like, woohoo. And then 13 seconds in, absolutely totaled herself, got helicoptered out. Like, I know.
Oh, God.
Quite sad. I was like, God, like you just don't hear much of athletes over the age of 40.
But it's
really.
also not even, I mean, it could be anyone. 40 or 20, is that still going to bloody hurt?
Yeah.
That's 3 years, you know. Like it's not as though she's like an old woman.
I know, but that's what I mean. Like you look at these tennis players and I'm like, gosh, they look like old men. But actually they're younger than us, some of them, you know. I'm like, wow, you really do peak as an athlete quite young.
Yeah. I mean,
So
I
that's
think
why you need to sort out your finances early.
it's true.
Yeah. Your career is going to peak a lot quicker than most people.
Although
That's the finance angle I can bring. That's all
it's really nice.
No
Well
other
done.
stats I
Yeah,
researched
that
about
was
the
so
Winter
good.
Olympics.
Let's talk about what's happening in the world. There's
Yes.
some really big, interesting news happening this week.
Yes. Now, we've got a bit of an update
Oh God, on what?
on Netflix.
Oh yes, the saga that continues.
Saga. I genuinely hope they make a Netflix series out of this Netflix deal.
I think they will.
Yeah.
It'd be weird to watch yourself being played. Normally it's like 50 years after.
Yeah.
But I wouldn't be surprised if in like 12 months' time they're like, hello.
Who would play you if you're in a movie? Margot Robbie.
Yeah, I get told that I look like Margot all the time. I actually am going to get my hair cut and dyed because I'm hating the
Farrah
brown,
Fawcett, you always get that a lot,
crown
don't
that
you?
I've got. Anyway, I was looking at photos of Margot Robbie being like, what's her hair doing?
Stunning.
Stunning. Have you watched Wuthering
No,
Heights?
but could you put two more hot people
I know.
together?
I saw a photo, something with his hand going into her mouth, and I was like,
I think it's quite sexual.
say no more. Oh, yeah. I'm hoping so.
Yeah. Anyway, we had about 10 seconds of finance chat. before we could-
Kendall Jenner would play you.
Oh, stop it. Stop it. She'd be a terrible actor, but anyway, who cares? I reckon Disney Plus or something would do the Netflix drama.
Oh,
you have
yeah.
to get an independent or like Amazon Prime or something, you know.
Yeah. Although you would need insight into like the characters and what was going on, and you only would get that from the inside.
But if Netflix did it, they'd have a one-sided view, you know.
True. For those who have missed this,
Yes.
there is a huge media acquisition happening, and it's quite fascinating. You know, there's some stories that we come back to a couple of weeks, and we give it a break and we come back to it. It's just the story that keeps on giving,
I
isn't
know,
it?
it is. It's like, oh, what are we going to hear this week? So anyway, Warner Brothers is essentially for sale. Netflix has wanted to buy it. Paramount came in also wanting to buy it. There's kind of two bids for Warner Brothers going on. Warner Brothers has said we want to go with Netflix, but Paramount's putting its foot down and going, no. Our deal's best interest for shareholders, you know, and they're making it very difficult. They have now come out. So Paramount has now come out and sweetened its deal more to get Warner Brothers across the line. Imagine just being Warner Brothers and sitting there going, what have you got? Oh, what have you got? And what else can you give me?
It's a bit
What else?
strip pokery,
It's
isn't
a bit
it?
like,
I'll
oh,
take my top off.
Yeah. But it's like, oh my God, here, I'll give you a bunch of flowers and chocolates. It's like, no, I'll give you flowers, chocolates and wine.
What is it
You're
like?
oh.
It is really, it's almost like trying to pick a teammate when you're at school or something. You know,
Yeah.
like,
It's
oh,
like-
cool, I see that, and I'll raise you your 5 chocolate bars, and I'll also throw in a free Powerade.
It's like trying to win over a girl.
Yeah.
You know?
Oh, yes, that's quite good.
You're like, but she's interested in him. And you're like, well, no, I'll buy a better car.
I've
Or
got a
I'll-
beach house.
Yeah. So Paramount has now said that it will cover the termination fee for Warner Brothers that it will have to pay Netflix if it ends these negotiations. So Warner Brothers has got to deal with Netflix that because there's a lot of lawyers involved. There's a lot of costs associated with this. So it's kind of like, don't F us around. If you're serious, you're serious. And so Warner Brothers and Netflix have a deal that if it falls over, then Warner Brothers has to pay Netflix $2.8 billion. Billion. Yeah. So
and is it just to Netflix? What about to...
So it's kind of like a make good being like, look, let's sign a little agreement a big agreement saying that, you know, we're in this, we want to help you get across the line and we will help you get there. And if we don't, we'll pay you $2.8 billion, essentially. So Warner Bros. Will pay Netflix $2.8 billion if the deal doesn't go through. So it's kind of...
So they're basically trying to say...
Don't take us for a ride. Don't take us for a ride.
But who's taking who for a ride?
Warner Brothers. Don't take Netflix for a ride, and Paramount. Don't try and entertain both of these deals. Like, that's not fair on Paramount and Netflix. If you're entertaining both deals, exclusively work with us to get this deal across the line. And Warner Brothers like, yep, cool. We promise we will. We promise so much, in fact, that we will pay you $2.8 billion if it doesn't go through. Does that make sense?
So basically, yeah. But is Paramount still...
And then Paramount's come out and said, look, Warner Brothers,
if you bail on them, we'll pay the 2.8.
Yeah. So it's like now there's nothing to stop you from entertaining both deals.
Oh,
do you know what I mean?
Yeah. They're literally throwing everything out.
Yeah.
It's essentially it's a ginormous penis competition. Can we just for a second talk about, is Warner Brothers that amazing?
I know.
Like, it feels like they're fighting over like a really bitchy girl who's actually not that nice.
But also what will happen if there is a Netflix Warner Brothers deal, that puts that new company in a much stronger position, which Paramount is now like going to be, if that goes ahead, oh shit, we've now got a much stronger competitor. So we need to get...
It's like, what's the lesser evil?
Yeah, exactly. It's like, and also we think we can be better and stronger with Warner Brothers as part of our company, but it's kind of, we need to prevent this as much as we can, because if it goes through, we're kind of effed over. But same with Netflix as well. That's why they're both, yeah.
God, imagine the bargaining power you'd have.
Imagine
as
the
Warner
whining and
Brothers.
dining of the
You'd be
Warner
like,
Brothers execs.
I'm actually not sure about that. If you could just book another dinner for us to just talk about.
I actually think we need to
everyone's
discuss this
exhausted.
over a holiday in the Caymans.
Yeah, I feel like the Maldives is where I'm going to need to be making this decision. But why? What I don't get is, like, how long is this going to go on for? At what point is someone just going to get f***ed off? Because it sounds like Netflix were getting a bit annoyed, being like, don't entertain this with Paramount, and we're going to pay these, you know, like, it feels like it's starting to get to that point.
So also Paramount. So remember, Paramount is controlled by a very Trump-friendly family, the Ellison family.
I forgot.
So kind of another reason why, this is getting very political as well. But they have also said they'd pay Warner Brothers shareholders a ticking fee, which means that for every quarter, so every 3 months, that the transaction isn't closed by December this year, they get an extra 25 cents
on each share.
Yeah. So
that's... Is this Paramount saying that?
Yeah. So this is to say, like, if the deal closes, and again, there is an agreement made and then the deal close, there's so much, kind of in terms of merging the two businesses and all that will take so much time. So that's why it seems like ages away, but these things take time. You're dealing with two massive companies. So even if Warner Brothers goes, okay, and all the shareholders agree, we're going to go with Netflix or we're going to go with Paramount, like, there is so much that then needs to be done. So what Paramount is saying is, like, they're saying to shareholders, we will close this deal as quickly as possible, and if we don't, and if things get dragged out, we will pay you more. So, like, they're really trying to get Warner Brothers shareholders across the line. I think if Paramount wins,
it's a political financial situation, because let's be honest, who would you want to be partnering with? It would be Netflix. It wouldn't be Paramount.
And I think I'm a bit biased because I own Netflix shares. So I'm like, Netflix, get in there, buy it, do what you have to.
Yeah.
Whereas if I was a Warner Brothers shareholder, I'd be like, well, whoever's going to pay me the most.
Yeah.
So,
or if you didn't own either, you're kind of
got
like
incentives. Yeah.
I really want to buy Netflix shares because I don't right now, but I'm still on Team Netflix.
Yeah. I think you've got time.
It sounds like
probably jump around a bit. If they do sign a deal with Paramount, then Netflix share price will probably go back up because this has been a huge distraction, huge cost. But then you've also got the threat, like what I was saying before, of Paramount and Warner Brothers now being a bigger competitor to Netflix. So, but yeah, Netflix's share price hasn't done that well because of this deal. The amount of cash they're going to have to pay for it, which means it puts their own business at risk, right? Because they've got less cash on their balance sheet, like all of that. So
yeah.
Yes. We will keep you updated, listeners.
Don't you worry. Don't you worry.
Should we talk about Pepsi?
I knew you were going there. I was looking at it and I thought, yes, that's what I'd like to talk about next.
So Pepsi has announced that they've raised their dividend for the 54th consecutive year in a row. 54 years. That's older than me and you.
I just can't imagine a business having enough money to pay out dividends like that for such a long period of time.
Yeah.
I mean, the idea of a dividend is that they're making so much money that they don't need to keep any more of it within the business. They can give it to the shareholders.
Yeah. Like dividends are a percentage of profits that are paid out to shareholders because, the company's like, we don't need the $1 million that we've generated. We'll keep $500,000, we'll pay out $500,000. So the fact that they've increased that every year shows just how consistent their profits are or how consistent their view on the world is and their growth plans, which, we've had a COVID pandemic. We've had a global financial crisis. We've had some pretty monumentous occasions and it still raised its dividends, which is wild.
The fact that Pepsi has been so successful over such a long period of time, I would have thought in the world of,
health
eating
and wellness.
well and going to yoga and running, that Pepsi would be struggling way more than being in a position to pay out even more of a dividend.
Well, they have 200 brands, over 200 brands, and they've got snacks. They've also got their drinks. Yeah, like they have 7-Up, Mountain Dew, like so many, Gatorade, all of those.
They own all the unhealthy drinks in every petrol station.
They've got 70% market share in the sports drinks market.
Oh, wow.
Yeah, which kind of lands into the health and wellness.
So is PepsiCo kind of like a Unilever but of snacks and drinks?
Yeah, it's the consistent, boring company, the stable one, the one that's defensive, and it sells 1 billion products a day. Crazy. They've actually also bought SodaStream, so that's probably their health angle.
I do love SodaStream.
Yeah. They paid $3.2 billion for it in 2018.
SodaStream also, don't you think that business, someone was just in their kitchen thinking, I just need to blow up a bit of bubbly water? It's pretty genius.
Yeah, I love sparkling water. If only I had a little contraption that could fizz my water. Boom, there's $3.2 billion. Honestly, wild. But
sometimes when I think about the idea of business ideas, you assume all of those easy ideas have been taken.
Yeah. But also shows me that you don't have to be a genius. You don't have to think of a new tech platform with like innovation.
So true.
It's just solve a problem that people have.
Or that you have.
Yeah, that you have. Yeah, exactly.
I don't want to buy San Pellegrino every time I need sparkling water. I just want to have it in my kitchen all the time.
Exactly. I'm like, what could we do?
Yeah.
But Warren Buffett owns a lot of PepsiCo, actually.
Of course he does, because it's a dividend-paying company.
Yeah, exactly. And it's a consistent... These are actually called dividend kings, which I know we can call them dividend queens. Any company that has paid a dividend consistently has raised its dividend consistently for 50 years.
So 50 years is the dividend king mark.
Yep, that's when you join the dividend king club.
Would there be that many dividend
There's quite a few.
Really?
Procter & Gamble, 3M, Coca-Cola, Walmart, Kimberly-Clark, Johnson & Johnson, Walmart.
God.
Walmart. Have you seen the Walmart share price?
No.
You think Amazon is dominating? Compare Amazon's share price with Walmart. Walmart is a sleepy giant that's no longer sleeping.
Wow.
It's up 163% in 5 years.
Oh my God, I'm just looking at it now. Even in the last 6 months, it's up a lot.
Amazon's share price is up 26% in 5 years.
Why is it doing so well?
People need to buy their...
You said this ages ago. You did say this ages ago when you were like
it's not an AI company.
No.
But everyone gets so caught up in what's the next AI. It's like there's a whole lot of companies out there that have nothing to do with AI that are also still killing it.
Thank God, because
they just don't get any airtime.
Yeah. I mean, Walmart, I can't even really... It's basically just a ginormous supermarket, like cheap chain supermarket, right?
Yeah. Well, it's just like a supermarket, but it sells like everything. It'd be like in New Zealand, the Warehouse, Woolworths, combined. Yeah. So this is a big green flag. When I saw this headline, I was like, massive green flag.
But green flag for PepsiCo or for those businesses in general?
Green flag for PepsiCo, just investing in, and I'd love to do this case study, if you just invested in the dividend kings, and I'm sure there's like a fund that does, how well you would have done. But the fact that they've raised their dividend again, this is the 54th year. If you want some stock steady defensive companies in your portfolio, which when the market has done and done so well recently, I'd be putting some defensive companies in my portfolio.
Defensive. It's like having your goal defense in there. Your wing defense.
Yeah, exactly.
You're having you've got your little centers that are the maybe
going for
AI,
the goals,
and they're the constant running around the court, and then you've got the defensive ones that are like, oh, you thought you were going to have a disaster? Don't you worry, I'm here.
Yeah, yeah. You need your goalie, but you also need your wingers.
Yeah. God,
I don't know what sport.
We really started the podcast sounding incredibly unsporty.
Yes, we did. Also, I want to talk about something which is the wealth in Australia BC and the wealth in Australia AC.
It's before Christ and after Christ. We're going religious with this one.
Yeah.
I loved this. When I first saw the headline, I thought it took me a while to get it. And
Did you think we were talking about Jesus?
Yeah. I was like, what is going on? Who is investing before Christ?
Yeah. I actually got this. I went to the doctor and they were like, when did you last get your smear or something? I don't know. I was like, oh God, I can't remember. And they were like, was it BC or AC? And I was like, and they thought that was so funny. I was like, before COVID or after COVID? And it was actually a good like ballpark. I was like, oh no, it was before. And they're like, oh, we need another one. And it was quite a good.
I guess it's a 5-year mark, really. Isn't
Totally.
it?
And it's like everyone kind of knows where they were, what they did, or at that point in time. So it is quite good, a good benchmark. Anyway, Wedgemark?
We go with it.
Benchmark.
Yeah.
Anyway, in Australia, there's been a huge divide in wealth with Australians who bought homes before COVID and Australians who bought homes after COVID. And
can I ask you, before you get into the story, is this going to make anyone that doesn't own a home in Australia or actually anywhere in the world feel really gutted with themselves?
Maybe.
Yeah, okay.
Sorry in
I
advance.
think this is the thing that's shit about property is you could have always bought it sooner and you would always be better off.
Yeah.
Which I hate because it makes everyone feel like they've missed the boat constantly.
But it's the same with investing, right? Could have always bought last year and you'd be up 20%,
True.
but like the thing is we take a long-term view with these things. There's going to be ups, there's going to be downs. So if you've got the funds and you want to make that investing decision, just do it. Not advice, but you know what I mean. Anyway, so people who bought property in kind of 2021 before COVID, mortgage rates were super low. So there was a lot of people buying properties and a lot of people able to borrow debt. So therefore they could get on the property ladder. And if that was one of you, someone listening, then they would be much more better off than someone buying after COVID where interest rates absolutely roofed it. And they're in a much worse off financial position than people that bought before COVID. Also, house prices went whoosh after COVID. Not straight after, but a bit of a delay after.
Well, because it was everyone really all over the world was thinking, get me home, get me to a nice space because I'm going to be stuck inside.
Yeah, we don't know how long this is going to go on for. So there was like low rates and house prices went up substantially. But rates take a while to move, right? You can't just jack up rates overnight by 5%. Like, it would absolutely break the economy. So they have to stagger them up. So they were staggering them up. House prices were falling. And then all of a sudden there was also a lack of demand because everyone had
already bought
the houses.
COVID.
Yeah. So there were these people that had bought houses at the peak and interest rates were rising on their debt that they'd borrowed. So it was kind of like a cluster.
So essentially, if you bought before COVID, you've done well.
Yep.
If you bought when things were rising, you're struggling or have done pretty badly because you bought at a peak.
Yeah.
God.
Yeah.
I mean,
and there was a pretty
fine line between.
Yeah, like there was a pretty, I guess, opportunistic gap in terms of like the time when rates were ultra low and then house prices absolutely exploded, which, I mean, I wasn't a buyer then. I bought a few years earlier, but I still got the benefit.
Really?
I'm still BC.
Oh, really? Okay,
Yeah.
right. So it doesn't matter if you weren't buying it.
Well, I guess the
increase is different depending on how close to that.
yes, yeah. If you were right on that mark, then you'd be So
I do feel for people who bought when it was really high. It's so hard because there's, I mean, oh God, it would just be so devastating to have bought and it already lost quite a lot of value on something.
And even now, like in Australia, property prices are 50% higher than where they were in 2020. And yet interest rates are also higher. So you are going to have to borrow more debt at a higher rate to get the house that you could have probably afforded before COVID. Does that make sense? So yeah, it's just a worse time to buy now with interest rates much higher than they were.
How much did people benefit comparatively? You know, you said you bought yours before COVID, but it wasn't quite at that point where it was the opportunistic mark. Can you put that in more tangible numbers? Like how well or much better off?
I guess it depends on how much you borrowed, but like the average wealth within the 25 to 34-year-olds that bought property between 2020 and 2021, their average wealth jumped 63% in 5 years. So if your net worth or your wealth was $1 million, that's just jumped 63% in 5 years.
Shit. It's a lot.
I know.
What about because, you know, there's obviously, we bang on about the Gen X generation who bought property and did super, super well.
Yeah.
Is this almost like...
It's bet that generation.
Really?
Yeah, it's bet the boomer generation and it's bet the Gen X generation.
In terms of increase in value or wealth over a period of time?
Yes, yeah.
Gosh, that's crazy.
Yeah.
Because we're always complaining they got in at such a great time, blah, blah, blah. I guess that's more of the entire generation than just a small percentage.
And I guess you can sit here and be like, oh, damn it, but like it's, you kind of just have to take the cards you've been dealt a bit when it comes to investing. You know, you're never going to, who knows what's around the corner, right? It could be house prices absolutely fall off a cliff and all those statistics
mean nothing.
Like it's true, kind of,
because actually unless someone sells now and makes 63% in the 5 years since they bought it, it might do something else and then it goes down by 60% and they've made nothing. And because they didn't actually crystallize their win. Yeah, you're right.
And it's like, it doesn't mean that just because you didn't buy property then that you're a failure. It's like, it's just more being aware of how the market moves, really, and there'll be more opportunities down the track, and you kind of just need to start investing where you can. You know, if you had to overstretch yourself to get into the property market in 2020, 2021, that probably wasn't the best idea either. You know, like it's just very situational, I think. But yeah, quite amazing the contrast between buying before and after. And I've got friends that bought after and they're still feeling the pain. It's quite sad.
I guess when it comes to property, and this is what we speak about on the property podcast quite a lot, it's such an exercise to buy and sell property. It's not just like buying and selling shares where you can be more strategic about it. There has to be an emotional, personal tie to the purchase. Well, there doesn't have to be. You can just be buying as a property investor, but generally it's a lot harder.
Oh, totally.
And also, not many people have that much spare money to be able to have their home and then investment properties.
Yeah.
Sort of one or the other.
And it's like, even the deposits are huge. Like, sometimes investing in the stock market, it is way more liquid. You can buy and sell. You know, you can get the money in and out when you need. You can start with a smaller amount. If that's for you, that's fine. You know, like this whole, like, you need to get on the property ladder, need to do, you know, like don't stress yourself. It's so many other ways.
I mean, I was that, so I can't actually sit here and be like, don't worry, it's fine, because I was so desperate to buy.
Yeah.
I don't know. I guess you're always going to look around and think that person did that at a better time than me. That person has a cooler top than me.
There's always someone more successful,
blah, blah, blah.
Hotter, more personality, funnier. Well, not in my case.
No, there's no one funnier. But, but it is. You could constantly look around and be comparing or thinking, what if? Or you could just be constantly trying to do better and learn and make good decisions, but actually just know that, you're doing your best.
Yeah,
because otherwise it's exhausting and you just literally will never get to a place financially where you feel proud of what you've done.
Comparison is the thief of all joy.
Yeah.
And if I take anything from this, it's like the property market goes up and down. Interest rates go up and down. They affect house prices. And we've got an incredible property podcast that explains all of this, but just never overstretch yourself financially. It'll cause you way too much stress and headaches going forward. It's not worth it.
And do you mean that in relation to looking around you, and if you think, I want a bigger house or I want a bigger this or better that, if you're having to really stretch yourself, it's not worth it.
Oh, it's not worth it. Yeah.
Because investing is incremental, and I do feel like if I look back on the last 5 years and I think, holy shit, I've come a long way in 5 years, but at the time along the way, it's quite hard to think, oh, wow, I've done it. It's the compounding of investing. In hindsight, you kind of have to trust the process of it.
It takes time, right? Like 5 years seems like a long time, but it actually goes bloody quickly.
Yeah.
And same with 10 years and all of that. So it's like the fact that I've nearly had my house for 10 years, I'm like wild. It seems like yesterday.
Absolutely wild.
Also some news on Nike and Converse. So Converse is actually owned by Nike.
I didn't know this.
Yeah.
Did you?
Yeah. But then not, I
Nike-
kind of forgot.
Has it been in the Nike family for a long time?
23 years.
Whoa.
Yeah. They paid $300 million for it in 2003.
2003, 2003.
Sounded really weird.
But don't you
2003.
think 300 million at the time would have been an enormous amount of money?
Oh, totally.
But now we're talking about
it's like the only-
SodaStream being bought for billions.
I know. It's also the only brand that Nike owns.
Oh.
Well, not that it bought, but that's under the Nike brand.
Interesting.
You've got Nike and Converse, essentially. Do you know what I mean? Like you would have thought, oh, maybe this is part of a strategy and they're going to buy lots of other brands and have a bit of a house of brands. But they've got their flagship brand, Nike. But Converse has been really, really struggling, and its sales are at a 15-year low. They've never been this low. So when I look at that and think you paid $300 million for a company and now its sales are at a 15-year low, probably wasn't the best purchase, So, yeah.
But I think, I don't know.
You buy a brand and you think, or business, and you think that sales are going to go up and up and up and up and up, or that you can add value or improve
But
it.
don't you think since 2003, the amount of money that Converse would have made would have definitely repaid that $300 million investment of buying Converse?
But you value a business on the future revenue and the future growth. So
Has it been going down for a while, basically?
Yeah. So they've really struggled, and the reason that I've put this in the Curve Weekly is that they have sent all employees have been told to work from home, and you'll get a call about whether you still have your job.
Holy shit. That is so stressful.
Yeah. So there's no news about how many job cuts or anything, but not good news for Converse.
No. What do you think about, because for me, Converse, I think sometimes with fashion labels, it's hard because things go in and out of fashion.
Yeah.
I would have said Converse is one of those tried and true, stands the test of time.
Yeah.
I still love Converse.
It's quite iconic. They're Chuck Taylors, but that's it, right?
Oh, do they have lots of other?
Yeah. And they tried to do the platform ones, the skinny ones, the thin ones. It's like the classic, well, for me, it's just stood the test of time. And I think when you can't continue to grow and innovate and you just have one iconic product, that's great, but also
there's no future growth.
What's next? Yeah. So Nike's got its own issues. It's got huge problems with sales in China, the tariffs, all of that, and its share price is down 55% in the last 5 years. And now it's got Converse's problem child that's also not doing well.
That's so stressful.
So I don't know, when you're trying to turn around a big business and you've got this wart on the side,
So what
not
do you think
helping.
someone could buy Converse and that they would get rid of it for a lower?
I think they'd probably divest it or sell it to someone. I mean, Puma's in the same position. There's a lot of sportswear companies that are struggling right now.
Do you think it's just the industry then, perhaps, rather than the fact that Converse can't innovate and find new product?
There's just so much competition now, right? We've got so much choice. You can just go online and order from wherever in the world, and
but there's so many businesses that are doing well that have the exact same thing where you can buy online and blah blah blah.
Yeah. Under Armour is another company absolutely really, really suffering.
Maybe it's apparel, like sports apparel is just doing badly.
And the tariffs have hit them, right? Their tariff costs went from $9 million last year to $294 million.
Wait, who's this?
Under Armour.
Oh my God.
Imagine our cost base. We've factored in $9 million for freight and logistics. And now it's $294 million.
You can't even really plan for that kind of.
It's just that is huge losses.
That's so scary.
They made a net loss of $450 million.
What happens in this sort of situation if all of these businesses, I mean, this is probably a really good example of if you have invested in heaps of different companies like this, like Nike and Under Armour, and they're all doing badly because you haven't diversified the types of companies that you've invested in, your portfolio would be looking terrifying.
Pretty dire, yes. But what happens with this is the companies that have a lot of cash on their balance sheets
can fund this awkward time.
or can get, if Nike and Under Armour had, then they can fund this awkward time. Or the ones, you might have, I don't know, an Adidas or a Lululemon. I mean, Lululemon's not doing well, but you have other competitors on the sidelines going,
What do you mean?
We're just going to wait for you to do.
Oh, and then they go buy it.
Then the shark starts circling and then they're like, okay, you can't continue to trade and we can buy your business for peanuts.
Oh, it's so shit, isn't it?
Yeah. But it's
God,
a
honestly,
struggle
I feel like
street for Netflix, for Nike and Converse, Under Armour.
God, it's a bit of a negative curve weekly, really, isn't it? There's a lot happening.
Let's talk about AI then.
Oh my God, because it's this new thing.
It's this new thing that stands for artificial intelligence.
I do like the name more than AI. Artificial intelligence sounds so fun. I feel like we're off on a spaceship somewhere.
Yeah. AI is just so used now that you kind of forget what it stands for.
It also doesn't flow off the tongue, AI.
Neither does ChatGPT.
No.
I'm sorry.
I agree. I keep calling it PT.
ChatGPT. Oh, just ChatGPT it. It's like,
yeah, I know. I agree.
Just, I reckon it'll be chat soon. Just chat it.
Yeah,
I put it in chat and it said,
Although I was speaking to someone yesterday and they were saying that chat is now almost one of the worst models.
It is continually changing, right? Like these AI agents are like humans. You feed them more information, they get better and better and better. And they learn and they learn and they learn. And there's going to be better programs and platforms that come out because they learned off better data and like all of that. So it's stressful staying up with
I must say that's one thing. If anyone has any recommendations on the best podcasts or articles to read or people to follow on Substack to stay up with what's going on, I almost need to have half an hour a day where I'm just like.
But I'm also like, I'm not stressed about it.
No, I feel like a granny. I'm so far behind.
Yes, but you're not. Like there is like so many people that are more behind than you are.
Yeah,
do you know what I mean?
I don't want to be like, the 3/4 of the pack at the back.
Yeah,
do you know what I mean?
You want to be the first.
I want to be passing
starting
the
blocks.
baton. The baton?
Baton. Alphabet, so that's the Google parent company, has raised $32 billion in debt by issuing a 100-year bond. So like we have heard of, all these companies investing billions and millions and billions into AI and all of that. Like Amazon's going to spend $200 billion in 2026 for data centers for AI, but this is really rare to issue an 100-year bond. Now, a bond is like an IOU. So this is Alphabet going, Soph, can we borrow some money off you and we'll pay you back in 100 years with interest? And you're like, yeah, cool, I'll give you 1 billion of that 32. And they go to someone else and they get another billion,
But people aren't going to be alive in 100 years. So how does that work?
Yes. So you can sell those. You can sell those bonds to, you might get to 50 years and be like, oh, I'm going to leave this to my granddaughter. And that kind of thing. Or you can sell it. There's like a market for selling and trading bonds. But what it shows from Google, well, Alphabet, is they're locking in this interest rate, this bond for 100 years. So they're saying like the reason you issue a long-term bond, it's like a big flex. They're paying interest on that 100-year bond and the actual money borrowed doesn't get repaid for 100 years.
That's so ridiculous to think about.
That shows to me they see this need for AI and the potential. It's not a short term, oh my God, we need to scramble, we need to invest and then pay back the money, ASAP. We need to, AI is not going to be around for that long. That like the fact that they're saying that it's going to be 100 years, we're going to pay it back in 100 years. So
is the idea here, what we take from it is that AI is a long-term investment. AI is not a flash in the pan. It's going to be around forever. It's going to be embedded into our lives. And businesses are so confident in that they're investing and loaning money for AI purposes and they're not going to be paying it back for such a long time. And what that says is this is a long-term investment.
And the fact that it raised $32 billion in 24 hours for a 100-year loan, essentially.
So outrageous.
That's also, if you think, look, I'm going to lend you money at a certain interest rate and you're going to pay me back in 5 years' time, cool. There could be risks within that 5 years, but it's visually I can comprehend 5 years. For me to sign up and lend you money at an interest rate, which could be 5%, whatever it is, for 100 years, shows that I have so much confidence in you that I am willing to take that risk for the long term.
And
Do you know what I mean?
24 hours for that many people to jump on it is absolutely
Just shows
crazy.
the immense interest and
Trust,
funding and support for AI.
Do you, and so with something like this, when they issued these bonds, would that have gone onto the public market? How did people get access to that?
Yes. Yeah.
Would you have bought it?
I mean, I just don't really, like, bonds just don't really interest me. It's a bit boring. I'd rather buy Google.
Also, I thought the point of bonds is that people buy bonds because they want that steady, more, recurring type revenue. It's more for older investors, but it feels very counterintuitive to have bonds that are for AI, which is like a very fast moving, agile.
It's a bond for Google. Like, that's probably where the like defensiveness comes, right? Only companies that are very stable, and the fact that Google can issue a 100-year bond shows that it's going to be around in 100 years' time. Do you know what I mean? It's usually governments. It's like blue chip companies.
I guess my point is that because normally people that are older that get bonds, wouldn't you be wanting a bond that's going to be returned to you within a shorter space of time? Because older people generally invest in bonds. A 100-year payback is so long.
You get a lower return on that though, because there's lower risk, right? So you get a higher return on a 100-year bond because there's so much more that can happen in 100 years. Does that make sense?
So right, so what they're getting from a money back in their accounts because they're taking such a big risk because it's 100 years. Actually, they might be getting quite a high income from that bond.
It's like a term deposit. If you put it in for 3 years or 5 years versus 3 months, you get a higher rate because it's
a bigger commitment.
Yeah, it's a bigger commitment. Yeah, so there's definitely that, but it is kind of counterintuitive that this money is being used to fund AI, which is deemed to be still very new technology.
Kind of more risky, you would think, but it's actually a safer investment because it's a bond.
Yeah, but it's effectively the company that's paying you back. So, the fact that a company like Google, a tech company, if it defaulted on this bond, would be like so bad.
Because also bonds normally only are from governments and like the most sturdy companies. And the reason that it's a lower return generally than a stock is because it's less risk that they'll default. Like you generally can only get bonds from the most well-established like institutions.
Yes.
So yes, there's a bit of risk involved, but it's not like a share.
Yeah. Or like governments, because governments can't issue shares, right? The governments are owned.
Yeah.
They're not owned by the people or by so their only way is to do debt essentially.
That's quite interesting. Yeah. Why would they not have issued shares and done this as shares? Why would they have done it as a bond?
Oh, now we're getting into some real.
Okay, right, okay.
But essentially the return on, their cost of issuing debt, so the interest rate they have to pay on this debt would have been lower than
of issuing shares.
Yeah, issuing shares.
It's basically a cheaper way to get money in.
And also like people get pissed off if you're constantly issuing shares because you're constantly diluting shareholders.
Also, it's a pretty amazing story and green flag to see a 100-year bond, don't you think? Like for other investors,
it's just a big flex.
Like their share price, you would think that would have seen a bit of a spike when it's like, hi, we've got a 100-year bond.
Yeah, I mean they've now got more debt though.
Oh,
so yeah, but it's more like we are going to be around for 100 years. We are so confident in our trajectory, and we are Anyway, it just goes to show like people are getting quite crafty in terms of how they're funding all this AI spend as well. So, yes, that's all I have for you.
Well, there's actually some stuff that's coming from the community.
Oh, nice.
Yeah, and I'd love to. There's a voice note actually that I wanted to play.
Hey girls, firstly, this feels super awkward to do. I've never actually done anything like this before, but your work and what the content that you put out makes me feel so passionate about networking and talking out and just doing stuff like this, which I normally wouldn't. Basically, what I wanted to know is I'm a new investor, really. I'm living in Wellington, New Zealand, and I find it really difficult to find investing platforms that I can manage. So I have Sharesies, but I know that there's like Hatch, and then I know that there's like private people. After your talk about Japan, I was really interested in looking at like Japan stocks and almost like the S&P 500 for Japan or China, things like that. But obviously you can't buy some of that stuff on Sharesies. So I'm just wondering, like, what platforms are accessible to us and how do we actually find that information? Because I probably know that there's a bit involved in terms of you can't say or recommend certain products. Like I imagine you can't say, look, Sharesies is a great option or whatever, because there'll be, I don't know, but your behind the scenes business legality stuff about it. But it would be really interesting to know, like, is there places that we can go to get informed besides ChatGPT? like where do I go? And how do I know what's good fees, things like that? Even like KiwiSaver, like how do I know that my KiwiSaver is good fees? Like what's the bench line, and can we talk about it more? So I just want to know investing platforms. How do we do it? Thank you, and I love your work. Thank you so much for what you do.
Bless.
I love the voice note. Can everyone send us voice notes? It's so fun to hear from people.
So much more real, right?
Isn't it? You're like, oh my God, people listen to this podcast.
So much in there. Okay.
God, where do we start? Do you know what I think we should do as an aside? Oh, what?
Yeah.
You go?
No, you go.
Oh, I was gonna say it could be quite cool to have a page on our website. We're building a new website at the moment where we feature our best picks in each area, like for KiwiSaver, really be clear on fees, the best for, ethical, the best for returns, like blah, blah, blah. Like the same with the platforms, like sort of highlight our favorites, have them featured and show the pros and cons so that people can then make that decision for themselves. Because there's not like one best of everything. There's different that suits different people depending on what you're looking for. Some people might want the lowest fee. Some people might want more comprehensive data on what they're trading. Some people might want all their stuff just in one place, like it might be quite helpful for us to.
We can do that for trading platforms, not for funds though.
What do you mean?
Like we can't recommend. So when she was like, as much as you can recommend, we can recommend trading platforms because that's not an investing decision. You then go on there and you choose what you want to invest in. And to be honest, I think Sharesies is the best in New Zealand. They have the most choice. Yes, there's a few things that we can't get on there, but I think there is also so much we can that, Japan, for example, you can get Japan ETFs on there.
That's a really good way around it. So it's like rather than feeling like you need to buy direct, you can do ETFs. I think ETFs is a really good thing to highlight because, for example, you might be thinking, and this is actually really interesting you bring this up, Ashley, because I've been thinking the ETF space, we could do a bit of education and help in terms of like, here are the top three, or not top three, but here are 3 suggestions for if you do want to invest. Oh, is that recommended? Oh, it's so hard.
And also it changes, right? Like the best, like what is the best? Is it the highest performing, the lowest fee? Yeah, like we can suggest places to go to make those decisions yourself. So we can suggest Sharesies, we can suggest Hatch, all of that. But saying, and this is the best investment, that's where we kind of have to draw the line, unfortunately.
Could we say if you're using Sharesies, we've put 10, we've highlighted 10 ETFs that you can access on Sharesies and broken down so that you can understand and make your own decision on what's best for you. Because we're not telling them to go and choose one of those. It's like, we'll chat about that offline.
Yeah, I think this is like
we'll chat about that offline, but it's a really good thing to bring up, and thank you so much for asking. It's really helpful to know the places that people are getting stuck. We can absolutely work on this, but essentially I use Sharesies in New Zealand.
Yeah, and don't stress yourself out about finding a trading platform in Japan or Asia or the UK, or like unfortunately we can't buy Europe or UK stocks on Sharesies, which is a bit frustrating, but I use Stake for that. But also I can kind of get what I want on Sharesies, unless there's one that I'm like really, really wanting to invest in, a company that I'm really, really wanting to invest in, which is not on there. But yeah, 99% of my investments are on Sharesies.
And the stuff that you use Stake for is that when there's something you want to invest in and it's available there but not on Sharesies. So
LVMH is a classic one.
Yeah.
Louis Vuitton Moet Hennessy, which I've spoken about a bit on the podcast, is unfortunately not available in Sharesies.
Got it.
But they're getting better, right? They're adding more, they're getting more regions, all of that, more ETFs. So maybe it is, in the interim, it's buying a luxury retailer ETF on Sharesies, for example, which includes LVMH. So there's ways around it.
Getting creative.
There's no perfect answer, and unfortunately, I think we will get to the place where one trading platform. We
Has
can access everything.
Yeah.
But we've come so far, which is so great.
Even a couple of years ago, I don't.
Shares weren't even around. So we'll get there. It'll just take time.
Hopefully that was helpful. Thank you so much for your question. Anyone that does have any, we've got a link in our podcast show notes to leave us a message on the Curve hotline.
You look very sweaty.
I'm sweaty. I'm boiling. Before, when we were having technicals, I took my top off because I was just needing to it's just so hot in New
We'll put a little insert in the YouTube.
I mean, poor Emily, our producer, must have gone on to when we started recording and seen that I was in my bra.
Oh, jeez.
Oh my God, we're doing a porno.
Oh, and that's time to go.
Okay, bye. Have a good week, everyone. Thank you so much for listening to The Curve Weekly. Make sure you hit subscribe or follow wherever you're listening so you're always up to date with the latest finance and investing news.
And feel free to leave a comment to let us know what you thought about this episode because we would love your feedback.
We've got new Curve Weekly episodes for you to listen to every Monday. But until then, listen to Erasing the Curve. These are our in-depth podcast episodes where we chat about all things money.
We're also around all week on socials if you're hungry for more Curve content, and all the links are in this podcast's show notes. We hope you have a great week, and we'll catch you for the next episode of The Curve Weekly on Monday.
Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.